Greetings. In this short video presentation, I want to take you through the investment memorandum for a loan investment opportunity in Souci, south of Sydney in the Sutherland Shire. This IM is currently on the platform. The loan is available for funding, but I need to emphasize to you that it is fastest finger first. We cannot take any investment commitments via email or text or phone call. You really need to sign into the platform and commit to the loan if you're interested in funding the loan further. This is the fairest and best way for everyone to get an opportunity to fund the loan, and I'm sure you will understand that we need to be specifically pedantic in this process. So let me take you quickly into the IM and share it with you. Point to note is that this IM has been redacted. Obviously, the one on the platform will have all of the full information that you need, but we need to keep privacy for the purposes of this video. So at a glance, you're going to get a return of 8.25% if you invest in this loan against an LVR of 52%. The total lend is a shade under $30 million. The loan term is for 19 to 22 months as a B3 credit assessment score from our credit team, and we're looking to raise $16.1 million in this raise. Please note that one of our institutional investors has already committed $8 million of this amount, so the actual amount that will be available on the platform will be half of this raise, around $8 million. The loan is for a development in Souci, and we're refinancing NAB's land loan and providing a construction facility for the funding of 38 residential apartments and 4 commercial spaces located in Souci. This is actually on the waterfront. As I've said already, the loan amount is 29 million. The tranche amount is 16 million, of which 8 million is already taken up by one of our institutional investors. The borrowers are 2 specific entities that have been set up for this purpose, and their private shareholders and directors will be the guarantors. The loan to value summary, 52% LVR, 19 months loan, 22 months maximum. The interest rate on drawn funds is 7.90% paid by the borrower. The line fee is 2.89%, and the investor return will be 8.25% per annum, paid quarterly in arrears for months 1 to 19. If the borrower elects the rollover, then the interest for the rollover period will be paid on maturity of the loan, and default interest, should that happen, payable to the investor is 11.25%. Our credit team has scored this as a B3, which means they consider default unlikely, with the LVR of between 50 and 60%. The loan commences on the 16th of November. We need your funds by the 13th of November. So there's a lot of time before we need the money, but there won't be a lot of time to commit to the loan because our loans do go quickly, and I ask you please to bear that in mind. So the development is designed by Tecton Group, award-winning architects. It's called Soleil. It's got a DA approval for mixed-use waterfronted development over 5 levels, 4 ground floor commercial spaces, and 38 resi apartments in Souci. It's being delivered by Buildem Constructions, a very well-known Shire builder, and the unit mix is there, as you can see: 2 1-bedders, 22 2-bedders, 12 3-bedders, 2 4-bedders with 2 levels of basement parking for 83 spaces, 19 bicycle spaces, and a loading bay. And the unit layout is traditional, oversized, open plan living areas, which will appeal to downsizers. Natural light penetrates all units with floor to ceiling stacker doors with access to natural light. Units from level 2 and up will enjoy fully unobstructed and partially obstructed views across Cogra Bay and the Georges River, across the Georges River towards Sylvania Waters, and across the Georges River and Botany Bay towards Cornell and La Perouse. So that really is pretty good. You see all the information over there. There's some information on the project location. I think I've given you enough for that. From a funding point of view, we're very comfortable with the funding. Civic MJD, the valuer, has given a realizable value of $61.29 million for this project, hence the 52% LVR, against which the construction facility is being funded. The current site value is $15 million, with $5.7 million drawn down at loan commencement, representing a starting LVR of 38%. We consider this to be a favorable margin, with the debt equity ratio increasing on an S-curve against work completed. We've done all the work in terms of the feasibility and the funding rate, and we're very comfortable with that. You'll be able to read that fully in the IM, which is available, so I'm not going to take you through it now. We've done a sensitivity analysis which shows you that even if there is a reduction to our lowest downside case, we will still come out of this quite comfortably. And based on sales analysis of apartments, we're comfortable that we should be able to achieve these selling prices, or that the borrower will achieve the selling prices. So all in all, we're very comfortable with the loan, both in terms of the location, the composition of the apartments, the builder, the feasibility, and the funding table. The developer builder has done a number of developments, highly experienced, as we're showing in the IM. And as always, we have first mortgage security over the security property. We have a GSA and all PAP registrations over the borrower. We have a featherweight security agreement over the shares in the borrower, tripartite agreements with the borrower and the builder, and the guarantees and indemnities given by each of the guarantors, with a maximum loan to value ratio of 52%, and the land value at commencement is under 40%, as I said, at 38%. There have already been sales and covenants, sales for units 208, 308, 306, and 502 for 5.425 million. These will be confirmed by our solicitors as qualifying pre-sales, and a number of conditions have been imposed, and McGrath and Lang & Simmons have been appointed as agents for the project, each party being well represented in the area as local agents. The guarantor's net asset position is in excess of $20 million, and each of the sponsors has individual assets and cash flows to draw on to support the project. Assets and liability statements are held and have been validated, so we're comfortable with the financial information. There's a decent exit strategy. In fact, there are multiple exit strategies, and there are the standard key conditions that go with our loans. As quality assurance, our external credit team, Souci PA, will have full oversight of drawdowns and will work with the project manager to ensure that the project progresses to plan and program, and that investor funds are protected at all times. We like the deal. The key points of recommendation are, as I've already said, from a timing point of view, minimum investment is $100,000 on the platform per investment entity. The investment must be made via the platform. Your funds are needed by no later than 13th November, with the loan commencing on the 16th of November. And just a reminder that the return is 8.25%, but default is 11.25%. So if you're interested in this loan, I highly recommend that you climb onto the platform, read the IM fully, and if you're interested, please register your commitment via the platform. If you have any questions or comments relating to the IM, please get in touch with us, info@zagga.com.au, or steve@zagga.com.au, or alan@zagga.com.au. But I ask you, please don't ask us to reserve or commit for you over phone, text, or email. We just can't do that for this one. So good luck. Hope you like the loan. Hope to see your participation. And until we meet again, keep well, take care, and best wishes. Bye.